Today in crypto, there are calls from prominent investors for Bitcoin to rally to $50,000 as central banks continued their frenzied attempts to try and prop up the equity markets. However, significant headwinds in the global economy are presenting incredible challenges for the central bankers, with fears of another massive correction and at the same time, greed for massive gains due to infinite money printing, really just fighting this battle at the moment for supremacy in the markets. So what will all of this mean for Bitcoin? My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. So, the Bitcoin thing. Let's start off with that. Still not really doing much at all. Are you surprised? I'm not surprised. You're not surprised either. Nor are any of my critters here. No, not these dudes. These dudes are hardcore, man. Takes a lot to get these guys worried. Anyway, volume is continuing to fall off of a cliff at the moment with a downtrend that has been in place since the big crash back in March continuing. Now, this dramatic fall in volume shows that market participants, they are simply waiting for something to happen. They're not really willing to commit either way right now. Bears are unlikely to commit until we break under the 200-day moving average around $8,300. And the market bulls, well, they're probably not going to really commit to the market until we break over $10,500. We remain stuck in limbo. This is accumulation zone. This is the time to stack sats and to chill. And although we have broken under the 50-day moving average, we're actually trending upwards overall for all of the key moving averages. That's the 50-day, the 100-day, and the 200-day moving averages, which is a sign that we are at least moving in the right direction at the moment for the market. And also, to note, we are still in a very strong setup when looking at the moving averages. The 50-day moving average is still above the 200-day moving average, so the golden cross is still in effect. And the 100-day moving average is also now above the 200-day moving average, just adding to the overall strength of the market, which of course makes a break to the upside even more likely. But we are going to get a breakout soon, whether up or down. The market cannot range sideways forever. So what do you think? Are we heading for a breakout to the upside or to the downside? Me personally, I'm feeling that we're looking for a break to the upside, considering just so many different factors, so many different indicators we've been covering here recently, from the moving averages to the supply, the buying of whales, all that stuff. But fear in the equity markets, that could still spell trouble for Bitcoin. More on that in a few minutes. Also, I want to share this with you real quick. We have been watching the Bitcoin dominance chart recently, and particularly the break of the Bitcoin dominance chart under that key line of support. Well, it came back up. It tested that line of support, which now acted as a line of resistance, and it failed there, meaning that we could see Bitcoin dominance falling even further in the weeks and months to come, which of course does not mean that the price of Bitcoin is going to fall. In fact, the price of Bitcoin can increase a lot even as its market dominance falls. But it does mean that the trend is moving in favor of altcoins, and that this is where potentially a lot of money is going to be made in the coming months and probably the next year or two in the crypto markets. A big thank you to PRIMEXBT for sponsoring today's episode. On PRIMEXBT, you can trade gold, you can trade oil, you can trade crypto and forex and stock indexes, including the top ones like the S&P 500, as well as other top global markets, which, considering all the craziness happening right now in the stock markets and in the forex markets, can be a very, very useful tool for traders looking to expand their options. Now, all of these markets, they are tradable against Bitcoin. All of these markets are tradable with generous leverage, and no KYC is required to trade on PRIMEXBT. And there's also another really cool feature on PRIMEXBT called co-vesting. Basically, investors are able to make an investment into a fund created by other traders, allowing you to basically ride on the coattails of a good trader and to profit along with them, which is pretty gosh darn cool. Anyway, Trading is definitely not for everyone, and PRIMEXBT is only for advanced traders who properly understand how to manage their risk. If that is you, then there is a link down below where you can learn more. Okay, so on to the topic of today's video. US stocks have just finished their best quarter in more than 20 years. Yeah, I know, you heard that right. Record unemployment. 40% of small businesses in the US are predicted to shut down permanently. 1 in 4 Americans are food insecure, and a whole bunch of other shocking statistics on top of that. The pandemic is making a brutal comeback in the USA, with cases taking a massive rise recently. And here comes the stock markets. Stocks just finished their best quarter in more than 20 years. Because investors, they're ignoring all that other stuff. And really, why wouldn't they? You see, because the investors realize that there's only one single metric that actually matters for the markets these days to go up. The Federal Reserve and their commitment to print infinite amounts of money to keep the stock markets afloat and in profit. No, not to help the regular people. No. There isn't any money for helping poor people. But there is infinite amounts of money to prop up corporations and to ensure that investors cannot lose. For that, the sky is the limit. Right now, though, hedge funds are rushing to get out of their bearish US stock bets. So net short positions in contracts were at their highest in a decade recently. But then these funds kind of got slapped in the face. They sobered up from their madness. You can't be shorting the market, man. Don't short the stock markets, no matter what is happening in the economy, no matter how bad it looks. None of that stuff matters. The hedge funds, they are realizing that betting against the infinite money machine, that's a bad idea. So they are starting to rein in their bets against the market. Also, take this story here as just an example of the complete madness that is unfolding. So Warren Buffett's Berkshire Hathaway was a recipient of the Federal Reserve's emergency program to buy up corporate bonds. Berkshire Hathaway is a company that is valued at $426 billion. Buffett's company is sitting on a pile of cash around $43 billion, and yet, the Federal Reserve is buying their corporate bonds. Warren Buffett does not need to raise capital to survive, nor does the Federal Reserve need to buy Berkshire bonds to save the economy. Quite the opposite, in fact. But the Fed is doing it anyway. The Federal Reserve is totally distorting the normal functioning of the markets. In no way, shape, or form did Berkshire Hathaway need the Federal Reserve to come in and buy up its bonds. The Fed has stressed, though, that its emergency interventions into the financial markets, they have a real-world benefit to everyday Americans. So just let me ask you this question, if you are an everyday American watching this episode today. Do you feel the benefits of this move? One of the world's richest companies, owned by one of the richest men in the world, with one of the biggest cash balances of any company in the world, being propped up by the Fed. Where are the benefits? Where are the benefits? There are no benefits. This is madness. Total madness. The purchase of corporate bonds, including, of course, risky junk bonds, which is next level insanity. But anyway, this is destroying really any fantasy which should be left in the minds of any investors about what kind of capitalism is now actually predominant in the United States. The Federal Reserve, it is now in the business of picking winners and picking losers, because this is the reality. If you cannot get your hands on the free money that is being handed out, then you are at a massive disadvantage. And there are a lot of small businesses who simply cannot get their hands on that money because they haven't paid the bribes to the politicians. They're not well connected enough. They're not big and important enough. This is cronyism. This is a broken system, and it cannot continue to crash under its own weight. And as a result, of course, we get stories like this one. A Wall Street chief strategist says that U.S. stocks have considerable upside from their current levels and could climb by as much as 20% in a best case scenario. And why wouldn't they think like that? All the stock market does is go up because the whole gosh darn thing is rigged. Right now, You have the World Health Organization out there saying that the worst is yet to come in terms of the pandemic. This recent statement from the World Health Organization, it makes it clear that the economy has a lot more potential for volatility. And look, I know, it doesn't matter what your opinion of the World Health Organization is. It doesn't. Because what actually matters is what the markets think of what the World Health Organization says and how the markets actually react to that and how the Fed reacts to any panic in the market. And of course, we already have the answer how the Federal Reserve is going to react because they've already shown us how they're going to react. They've told us very explicitly. They will expand the balance sheet. They will buy corporate debt, both investment grade and adjunct grade. They will increase the lending for the overnight repo markets. They will do more bailouts. They will cut regulations. They're going to cut sweetheart deals and, of course, really just print loads more money and drop more stimulus into the economy. Right now, discussions are ongoing about a second stimulus package with a decision likely to be made on that by the end of July. But the Federal Reserve at this stage, they're running short on options. I mean, yeah, I know, print more money, burr, 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 burr. Sure, but what comes next? Because there's still more tools they can pull out of their toolbox, like buying stocks directly. Negative rates, that's also on the table, just like they have, of course, over in Europe. Everything is possible. And while the Fed is, of course, the worst offender globally of all this madness, other banks doing the same stuff. The ECB's balance sheet has just spiked up to 6 trillion euros. The ECB balance sheet now equals a record of 52% of the Eurozone GDP. So it is not just an America thing, it's basically an everywhere thing. Many key economies, they're all drawing from the same playbook. Anyway, it's not certain how the coming months are going to play out as fear continues to linger over the markets and there's still a lot of possible upsets that 2020 can throw our way. A lot of economic uncertainty, a lot of hardship for regular people remains. Anyway, so what does all of this mean for Bitcoin? Well, if the Federal Reserve steps in and prints a bunch more money to save the markets once again, that means Bitcoin's probably going to go up because it has a very high correlation to the stock markets at the moment. And if it fails to do that, or there are some more events that drive the market down massively, Bitcoin's probably going to go down because we have a high correlation right now to the S&P 500 and stock markets overall. It has not been like that forever. Historically, Bitcoin has had an incredibly low correlation to the equity markets, but that massive money printing and all that central bank insanity, it's just driving the markets to insane levels, and our close correlation at the time is continuing. It will not last forever because you have to keep in mind the disastrous effects of what is being done right now, it will start to be felt probably in the coming year or two. All this money inflation, it can't not have an effect. Meaning that calls like this one from Bitwise become increasingly likely to come true. Bitwise is calling for a $50,000 Bitcoin price when the market calm finally breaks. Big cryptocurrency investors, including Pantera Capital and Bitwise Asset Management, say that Bitcoin prices could benefit from the next wave of government and central bank stimulus packages, which of course are probably going to be needed to prevent any kind of deeper economic fallout. Now, the global head of research over at Bitwise said that it is a question of when, not if, Bitcoin hits $50,000. And honestly, $50,000, man, it's a pretty conservative prediction, to be honest. And while no one knows for certain just how high Bitcoin is going to go in the next cycle, $50,000 is really on like the bottom end of, the hopium range there. $100,000 and beyond, that is what many of the more, hopium-addicted investors are targeting without a doubt. But look, keeping it real, the broader macro backdrop, it has never been more favorable for Bitcoin than it is right now. Remember, this is a game of diligence. This is a game of patience. Look at the big picture. Look at what's going on with all the central bank insanity. Bitcoin was made for this. You need to stack sats. You need to chill. That's the game. Anyway, your question for today. Do you think that the stock market will continue to rally with Federal Reserve intervention? Or is it likely that we're going to get a massive correction in spite of all of the money printing that we see going on? Are the forces of nature just too strong for the money printers at the Federal Reserve to hold back forever? Let me know your opinion down below in the comment section. Thank you so much for watching today's video. As always, I massively appreciate your time, so thank you so much for taking some time out of your day to come over here and listen to this dude talking about crypto. Long live the blockchain, and peace out till next time.